Hi guys, today we're going to be going over financial literacy and we're going to be talking about different types of taxes. So let's get started. Ms. Parvin pays a tax every year because she owns a house. Okay, so she owns a house. That's important. Which term best describes this type of tax? So before we get started, we're going to be going over some vocabulary cards. So here we have gross income. So gross income is the total amount of money that you earn. Okay. Then we have money people pay to support the government is called taxes. Okay, so taxes. We have different types of taxes. We have sales tax, property tax, income tax. And then gross income. This is how much money you get. Then we have what's something called a deduction. Okay, so the government or your employer sometimes deduct money from your paycheck before you even get it. So a deduction could be like an insurance or a tax, okay, or a retirement fund, okay. So any of those could be a deduction. And then you have something called net income, which is what we're going to talk over here. So net income, this is how much money you actually get put into your bank account. So net income, if you notice, is the amount down at the bottom, okay? So net income is the amount of money you receive after the deductions are subtracted from your gross income, okay? Then once the deduction is done and you have your net income, then you have something that's called a deposit, okay? So they take this money and they deposit it into the bank. They put it into the bank. So a deposit is money put into your bank account. Okay? So on payday, when your employer is going to give you your paycheck, sometimes you set up automatic pay and they put the money directly into your bank account, and that's called a deposit. Okay. Then we have something that's called a balance. A balance is the amount of money that is in your account. So your balance on your account is the amount of money that you have in there, and that's the amount of money that you can use for whatever you need. So when you do need to use your money, that's called a debit. So a debit is the money that is taken out of your account. So for example, here is your balance. So let's say that you have $125.50 that you get paid from somebody that you work for. So they put this money in your account. That's called a deposit. But let's say that I need to pay my babysitter to take care of my kids. So I have to withdraw. That means I take out $50. That's called a debit, okay? And then let's say that I get money for my birthday. So I deposit $87. And then my balance is how much I have left over after all of these transactions happened. So my balance would be, this is how much I have left over after I put this money in, took this money out, put this money in, and then this is my balance, my final balance. We also have something that's called a budget, okay? So a budget is basically something a plan that you're trying to go by. So for example, Mia's budget is, let's say that she has $800 that she gets paid every month from her employer. And she knows that she has to use $725 of those dollars to pay all of her bills. Then whatever's left over can go into savings. She can either save it or she can use it for other things that she might like. A balanced budget means that you have your total income have to equal your total expenses so that you don't use more money than you have. So, a balanced budget occurs when the total amount of money spent, saved, and shared equals total income. A plan for how much income will be received and how it will be spent is called a budget. Okay? So all of these words were going to be used in today's problems. Now let's go back here. We talked about income tax. So I'm going to write down the definition. This is tax by the government directly on annual salary. So, income is a tax that is given to you by the government directly on your salary. So, for example, if you get paid $20,000 a year, then the government takes a percent of that. They tax you on it. Then we have payroll tax. That's tax paid by the employer to cover Social Security and Medicare. Then we have sales tax. This is probably something that you are familiar with. So anytime you go and purchase something at the store, they charge you taxes, extra taxes. So that's a tax on retail items purchased. And then finally we have property tax. So tax on the value of property that you own. So property is anything like a house or a farm or let's see, land, anything like that, okay? So if we go back up here and it says that Mrs. Parvin is paying a tax every year because she owns a house, okay? So let's come back here. Income is on your salary, okay? That's how much money you get paid. So that's not the same thing. Then payroll is paid by the employer for Social Security and Medicare. That's not what we're talking about here. Then here it says this is on sales tax, retail items. So retail means something that you purchase in a store, okay? So that's not really where you buy a house. And then here, this is the one that we're talking about, property, which could be a house or a farm or land. So that's what we're gonna circle here. This is a property. This is something that she owns. So she has to pay taxes on it. All right. The next one says, a definition of a financial term is shown in the box. A tax on retail, oh, we heard that before, based on a set of percent of retail cost. Okay, so which term best fits this definition? Okay, so we already talked about income tax. We know that income tax is taxed by the government depending on your salary. Okay, so that's not the same thing as retail, so we're going to cross that out. Then we have payroll tax. So we know here, tax paid by the employer to cover Social Security and Medicare. Not quite what we're doing here. Then we have our property tax. So we said tax on the value of property that you own. So we're not talking about a house or a farm or land. We're talking about retail items. So if you notice here, sales tax is retail. Okay. All right, here we go. A definition of a financial term is shown in the box. A tax that includes Social Security, here we go, Social Security and Medicare, and it's paid by the employer, okay? So we had already written some of these down, so let's see. Here we go, payroll tax. Tax paid by the employer to cover Social Security and Medicare. So we're looking for payroll tax. All right, so here we go. So we already talked about property tax. That means you have to own something, a house or land or a farm or a car, things like that. Those are properties, okay? We already talked about sales tax. That has to do with retail items, things that you buy at a store like clothes and shoes, things like that. And then we have gasoline tax. So this one we haven't, so I'm gonna write this one down. So tax on the sale of gasoline. Okay. All right, last one. Which of these is not, so we're looking for the one that is not an example of property tax, okay? So remember we talked about property. It has to be something you own, okay? All right. Letter F says tax paid on the value of a farm. So that's true because a farm is something that you own. It's a property, somewhere where you can live. Okay. Letter G, tax paid on the value of a piece of land. Okay. So land is also true because that's somewhere where you can live. That's a property. Letter H, tax paid on the value of a piece of furniture, okay? So furniture is something more retail, okay? So this is more of a sales tax, okay? So this one would be false. And then letter J, tax paid on the value of a home. A house is a property, so this would be true. So the only one that is not correct is letter H.